And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Today is Thursday, August the 17th. August seems to be flying by. My name is John Hoagland. As always, thanks for trusting me with your time. As always, we're going to be looking for accurate context, looking for good risk management, and always patient, ever patient in our trading. Hopefully, if you're in the markets already this morning, things are going your way. Not a lot of huge opportunity yet, but I think we've got some interesting opportunities in our equities markets. We're going to see those in the charts shortly. As far as economic numbers came out this morning, the retail sales numbers came out a little bit disappointing, a little bit lower than expected. We are still expecting at 8:15 during the market forecast industrial production numbers to come out. 9 o'clock this morning Central Time, business inventories and housing market index. And then at 12:30, the Fed Chairman Powell, is going to be speaking. I know a lot of folks will be just kind of listening in on that to hear what he has to say about the end of quantitative easing, which seems to be getting pushed closer and closer. As far as other news is concerned, U.S. stock indices were largely lower this morning in early trade after the Dow and the S&P put up new highs, record highs yesterday. Part of the reason from what I'm seeing is some Chinese tech stocks have been hitting the skids after China's regulators issued a new rule or some new rules to stop unfair competition on the net. Interesting. As we're all, I'm sure, aware of the U.S. pulling out of Afghanistan and the Taliban recapturing Kabul after 20 years. Make sure we say a prayer for peace everywhere, as always. Walmart and Home Depot beat earnings expectations, but they're apparently still underperforming. Powell's speech is to be scrutinized for info regarding the end of quantitative easing. Crude prices continue to slip on world demand issues. Everybody, make sure you say a prayer and do whatever we can do to help those in Haiti after the earthquake. And now they're facing a tropical storm on top of that. So we keep all of everybody in our prayers at all times. Anyways, as usual, make sure you like that, you hit that lucky like button, share, comment, question, feedback, heckling, and are always welcome, of course. And make sure you subscribe to our YouTube channel. A quick look at the VIX this morning, up about 5%, 1703. Still not a big number, but every time the equities show a little bit of weakness, that VIX certainly seems to jump to the upside. Dollar index 92.85, up slightly from last night's close, and the yield on the 10-year resting comfortably at 1.25%. As always, I have to say good morning to everybody. Brian, you're the early worm lately. You win the prize. First one in the room. Brett, good morning. Murph, you don't be working out in the rain with your laptop. That's not going to be very good about that. But we've got some beautiful weather here over the weekend, and still a nice day here in Chicago. Good morning, Stack and Bananas. Fred, hello everyone. September contract still has higher volume in crude as of the moment. But it looks like October will be the high volume contract, perhaps before the day is out. And of course, yes, today I'm still going to be looking at the September contract. It was still a little bit more volume this morning. So if you've moved to October contract, that's fine. I think there's a 23-cent discount from September to the October number to adjust your numbers, but it's okay either way. I'm going to finish out today in September, and we'll be looking at the October contract tomorrow morning on the forecast. Bill Phillips and Fred, good pointing that out to everybody. Yes, Crude is in rollover as every month. Good morning, Bill. Good morning, George. Daniel, good morning. Question for Hogue. Do you think the lumpy and irregular profiles I've seen in recent days are a result of contract rollover? Do you think I should expect these profiles to be repaired? Yes and no, Fred. I think a lot of it has to do with with rollover. I think that the short time frame control that tends to run the rollover is presenting itself in some lumpier profiles, some group think, if you will, some herd mentality pushing price around a little bit. Will we expect to see them repaired? It depends. If something happens and moves us away from this area, I won't be looking at those lumpy profiles so much, but more looking at the naked points of control. There are a few of them in the neighborhood. So we're going to take a look at that on the profile today on TS Trader so we can have a look at what Fred is talking about. Remind me if I forget. Good morning, Ednelson. Ray. Good to see you, Ray. Good stalking to you. Shubham, good morning. Zorain, good morning. Jim, Vince, good morning. Jorg, good morning. John, Ryan, Greg. H2O. Nothing like some good water strained through some coffee grounds. Gotta have my Norwegian gas in the morning here. Nick Enns, good morning. Andre, Tanya, pleasure to see you. Kevin, Ricardo, April. What do you think about NQ recovering the 50% movement of the cash session yesterday? Well, we'll have to take a look at that, April. In pre-market, I don't trade the Nasdaq because it gives me heart palpitations. But we're going to see if we can find what you're talking about and see if there's some comment about that. Good morning, Laura. KM. Keith, Subconscious. Thank you. Good morning to you as well. Mario, Jason, Fred. Are the Haitians facing tropical storm Fred? I'm not sure the name Fred, but yeah, my heart is certainly going out to everybody there. What a tragedy and a mess. When Nelson stacking bananas. Oh, let's get it. Got wrecked yesterday. Well, it happens. The question is, how wrecked? Did you get emotional and take things beyond where they probably should have stopped, or did you recognize that maybe things weren't working out that well for you and stopped and just make sure you're here to play tomorrow? Let's do this. Likewise, for the stalking, Ray, thank you very much. Systems analyst, good morning. Ricardo, LOL about Nasdaq, and yeah, I went red on that. CL's been saving me though. Okay, maybe I should stop trading the NQ2. It's stressing me out. It's such a whippy, vicious, thin, kind of illiquid market. It just doesn't do it for me. But it's probably the most popular product here at Top Step, and people like the action, I guess. I'm more of a, sit, wait, and stalk my opportunity kind of guy. And for me in the NASDAQ, it's just a little bit too whippy. Pretty much, it didn't bust my funded account, barely. Well, that's good. We don't want to do that. Absolutely not stacking bananas. We want you succeeding, building the account, maintaining the account. So you're here tomorrow so you can get the opportunity to buy the time to learn and get better and better at what you're doing. That's the goal. Speaking of which, today is Tuesday. Tomorrow is Wednesday. Tomorrow is group coaching day. It's at 1 o'clock p.m. Central Time. There's the link. You can register and join us. You can send in email questions. You can also ask questions on the fly. Wednesdays are my favorite part of the week because I get to spend the time with a bunch of traders talking about trading. We are going to get into the charts here. I want to make sure and get everybody prepared and ready for the equity open today. There's a couple of interesting things going on, and let's take a look at them right now. As always, we start with the crude oil, and we'll start with the daily chart. Let's have a look. All right. So it's in rollover. It's been largely, I would say, range bound for the last week or so. 1, 2, 3, 4, 5, 6, 7. 7 trading days, largely in range between these two sessions here. I'm still in September, as I mentioned, about a 23-cent discount from September to the October contract. It's been kind of having a little bit of trouble holding rallies. We're looking at this as a kind of a larger area of balance, but we've been putting up lower highs and relatively even lows, so it's looking like a kind of a long time frame falling triangle that may take some time to work its way out, ladies and gentlemen. A lot of questions as to demand. We got supply numbers coming out today with the API, EIA tomorrow. 6,700, this weekly kickoff level, still seems somewhat important and pivotal, but it also may become magnetic. So there's a big caveat when that begins to happen. Again, we have the API numbers due out tonight. So here's where we are. We just opened up. Settlement is here. It's 67.29. Put that on your charts. I don't think that there's a huge amount of overnight inventory with which to deal with, but we have one of Fred's lumpy profiles all day yesterday. The market looked lower, couldn't accept, came back above, closed back above this 6,700 line, weekly kickoff line. Now it seems to be magnetic. Sometimes these levels, these important levels, don't attract the longer time frame trader, especially during rollover. They tend to become a little bit more magnetic, and that's what this looks like, at least in the overnight. So if we're thinking long above, short below, we're going to get chopped up in this. We're in the middle of the value area from yesterday, so I'm going to suggest trying to stay relatively patient, looking for opportunities as the day goes on. I know that's difficult to do. We got the open here. Don't know if the opening range is the high or the low of the session. Doesn't look like it's much of either. So inside range, inside value, stay patient, better trade locations likely to come as the day goes on. Here's the lumpy profiles that Fred is talking about. We have a lumpy profile yesterday. We opened right in the middle of that lumpy profile. I would say that there's a pretty good probability of us trading to the high volume node here, or the high time node, high volume node down here as a repair area. Outside of yesterday's range, I'm looking at more naked points of control. We don't have any naked points of control below us. Okay, so this will be kind of new territory. But if we're looking for repair, we go high volume node to high volume node. It is very possible for us today to trade to both of these high volume nodes. If we get up here and check this point of control and we get through it, there's another high volume node here with which to deal with. But anything that's already been run through back here, I'm not that interested in. So, Fred, it's yesterday's range and value that I'm looking at. Okay, so we've got value high and value low right here. Okay, in TPO value. So here's the value low, here's value high. Takes us basically to both of those higher volume nodes. Same situation here. Okay, value high, value low, takes us to those. But in the middle here, I'm not that interested. I'm going to be trying to stay patient again and looking for the market to check to point of control up here, and perhaps to even check down to value low here as a check of the high volume nodes in the volume profile. All right, hopefully that helps, Fred. Let's see, Fred, here. Poor low on Monday's low right here. Fred's talking about there's no real excess down here in the short time frame, which is is prime for a return or a check too. Whenever we leave poor lows or poor highs, there is a magnitude to them. So, if we can't get above weekly kickoff high and we get below value low, this would certainly be an interesting target for an exit, or perhaps even an execution. Nasdaq, S&Ps. Come on. So yesterday, we put in a new all-time high. We had some pretty decent volume. However, we lost 9,500 estimate in open interest. We would expect a move to an all-time new high, and especially the way it happened yesterday on just a one-time framing activity all day long to actually bring in buyers. But it looks like it actually chased shorts out of the market, which is kind of traditional for what the S&Ps do. We got within 3.5 points of weekly kickoff high yesterday. We were unable to reach it even at the end of the session. The market is attempting to go higher, but I'm continuing to ask myself, is it really doing that good a job in doing so? And yesterday, if you tried to short it all, you got run over. But is the move actually strong? Higher volume, lower open interest. What we did have is a late spike at the end of the day. Okay, now those of you that have been with us here at the market forecast, we know we look for these late spikes. The end of the day blow off. Market closes right at the high of the session, which is 44.74 even. Put that on your charts. Look at how short the overnight inventory. It must be very short, right? But when we open below the late spike, it's a marking of rejection of higher pricing. It's not going to be easy necessarily to find good trade location because the spike is so much higher and we have this overnight inventory to the short side. If sellers don't come in and take this market lower right away, some of these overnight shorts may bring us to a better trade location to look for a short if that's what our plan was or is. So I got to stay patient. Why? We're in range, we're in value, but we also have this information that the price is, for the time being, rejecting higher prices in the fact that it's not testing above or inside the late spike that occurred yesterday, which would indicate acceptance of higher pricing. This is rejection of higher pricing. All right. Where are we here? Let me look here. Okay, so yeah, the late spike. I want to show it to you on the TPO chart. Okay, this is the 2:30 to 3 o'clock bar is M. N is 3 to 3:30. The market continued to push higher all day long yesterday. This blue line is settlement. So we closed we finished the trading day up here, but we have not been able to maintain price up there inside the late spike or above the late spike. So our price is currently much lower than that. It's going to be telling us that this market is likely rejecting higher pricing and to look for opportunities for good trade location on the short side, which is a difficult thing to try and do. Nasdaq already kind of showing rejection of higher pricing. There was a late spike here as well. So let's start with the daily, of course. Range-bound short time frame activity. Basically, this bull flag has failed. We're going to remove it. I might keep this trend line on here a little bit, though, because there's some good points of contact. We're basically range-bound and in short time frame control. How do I know that? Well, the big volume that we put up yesterday added nothing in open interest. It was even, basically within 100 of zero. And that's on the preliminary. It could be a little bit different, but it gives us the idea that all that activity yesterday, all that volume yesterday, and we didn't bring money into this market in either direction. Volume was good, again, but open interest, largely moot, largely not an event. So this is that upper trend line for the bull flag, which has now pretty much failed. I mean, we looked below it. We looked below it yesterday. We recovered back above it. We're headed back down to it with some rejection of higher pricing. No new all-time high in the Nasdaq. Nasdaq's been a lagger that way, and we see this market continuing to push to the downside. Is this new business coming in? It very well might be. Because we have our overnight inventory, which is short, weaker hands traders holding these shorts. Right now, they're continuing to get paid. They're not going to go anywhere as long as that continues to happen. Very toothy profile. Opening in the middle of it might bring us to an area of repair, just like in crude oil. We may open and repair from this high volume node to point of control down here. It's going to be difficult to find good trade location today. If we can't get the overnight inventory to give us a better trade location, there's going to be a lot of chasing going on, and try not to do that. Try not to chase. Gold. I'm going to start on the daily here. Okay. Volume is doing its best to maintain off the lows here. It's not really bringing in very good volume. Big boost in open interest, however, yesterday, adding 5,200 in open interest on the move yesterday. Even on lower volume, that suggests perhaps continuation. And we have so far in extended trading hours an overlapping to higher range. So that means right now we're probably putting value a little bit higher than yesterday as it was the day before and the day before and the day before. We've got value moving our direction. The question is, how good of a job is it doing getting there? I'm looking forward to seeing the weekly kickoff high in gold here, which is 1807, as an area where we might get some sort of an execution. Don't know if it's going to happen today. If it does, there is a decent move to the upside, and then another look at that 1807 level, which is, again, where I believe longer, stronger traders might need to, want to, or be forced to adjust their inventory one way or another. The 30-minute chart. Okay, so we had settlement right here, 1789.80. We had a little bit of overnight longs here that have taken price back down to settlement. Here's our weekly kickoff level here, 1807. We got a point of control between here and there. Doesn't look like we're going to be headed there today, at least not at the beginning. The market has come back into range, back into value, back into balance. There may be some opportunities in here. I would be patient looking for value low before trying to get into anything here. We don't have a gap, no gap, no gap. Patience. Stay cool. Opportunities are likely to come as the day goes on. The euro. Okay. So it's a little bit separated from gold. We had a lot of the similar situations chart-wise going on in gold as we did in the euro. We've separated from that. Volume continues to be very low down here. Open interest. We lost 2,000 in open interest yesterday. Is that longs liquidating? I mean, by direction, that's probably what that would mean. But we are in short time frame control and still are. We have the weekly kickoff low here, which is still somewhat pivotal, 1745. We're just kind of dancing around it. Again, if it becomes magnetic, it can chop you up. So we had we had two gaps on either side of the ranges from yesterday. We've now taken care of this gap, which is right down to to weekly kickoff level. This point of control looks like there may be some fish there. There's some convergence. We've got value low. We've got point of control. We've got an unrechecked settlement area. This looks interesting to me. There may be some fish down here. But we've also left a gap above price, which is up here, and then of course we've got weekly kickoff highs. So I'm going to stay patient. I'm going to see if we can find some sort of an entry down at this level if given the opportunity, if only because it allows us to limit our risk. If we take this long here at point of control or at value low, we're only risking a few ticks till we get beyond the bottom of this range, which could be enough to attract more sellers coming in. But again, we've got some considerable overnight shorts here. If they decide they're going to get out, there may be an opportunity for a better trade locations for shorts than where we are here. I'm thinking more like this might be an opportunity for a move in the opposite direction. But again, keep your expectations reasonable in that regard. Okay. The 10-year, we have some upside continuation yesterday that brought some pretty decent volume, as well as added 30,000 in open interest. Okay, we're still pretty centrally located between kickoff high and kickoff low, which leads me to believe that a lot of what we're seeing here is shorter time frame control. We have last week's high just below us, and this could be another interesting area. I mean, we're overlapping higher in extended trading hours. The 30-minute, we had some overnight longs. They've now reconciled. We've got a little bit of a gap down here. We also have a naked point of control right here that offers a little bit of visual targeting. So if we close this gap, I'll look for a move to this point of control just to go ahead and check it. All right, so, all right, I made it. We've got about 4 minutes before the equity open. Some tool to set automatically the 5% price level in every market. No, there is not one. Keep a quote board up on your platform, which will tell you when you are at that level. I know it's a kind of a pain, but it doesn't happen that often to where we really have to concern ourselves that much with the 5% price halt. TPO chart on the Top Step platform. Subconscious, I want to let everybody be ready for the equity open. If you remind me tomorrow, I'll try and do it on the forecast. But don't forget, tomorrow is group coaching. Come to the group coaching. We'll have a really good conversation about how to open it up, how to change it to different time frames and change the colors of it. So your best bet, I think, Subconscious, is come to the group coaching tomorrow. Chart type, hit T, TPO. Yes, you have to use the new charts, not the legacy charts. All right. Trading hours for currencies, 7:20 a.m. to 2 p.m. Central. 7:20 a.m. to 2 p.m. Central. Okay. Let's take our deep breath. Let's be ready. Be humble, grateful, and creative in your trading today. We'll see you about 11:30 for the coach's playbook. And other than that, I'll be back tomorrow morning. Dan will be with you this afternoon for the market recap. I'll be with you tomorrow morning for the forecast. And don't forget, group coaching tomorrow. I'm going to put that link in one more time, and that's going to do it for this forecast. Trade well, everybody. We're looking forward to your success. Have a great trading day, and I will see you later on.